We all witnessed the heights FTX fell from this month. It was horrifying. The founder of the defunct cryptocurrency exchange FTX wrote to its former workers to apologize for his role in the exchange's collapse and to reiterate that the misplacement of $8 billion is the only factor that led to this. Let's find out more about this and the future of FTX. First of all, let's look at what SBF is sorry for. In the letter made public by the business news website CoinDesk, Sam Bankman-Fried stated that he sincerely regrets his oversight error. In hindsight, he wished to have handled many things very differently, and continued, "Even if it takes the rest of my life, I'll do everything I can to make it up to you guys and the customers." Despite the apology, Bankman-Fried maintained that the business could be preserved and that he could have done so if he hadn't been forced to file for bankruptcy in mid-November. According to him, about 8 minutes after he signed the Chapter 11 documents, potential interest in billions of dollars of funds surfaced. Now, this could all be a case of would've, could've, should've, but for what it's worth, the man owns up to his mistakes. In the letter, Bankman-Fried reaffirmed assertions that FTX was a fundamentally sound company, while providing a story of the company's collapse that showed it to have $60 billion in assets and only $2 billion in liabilities as late as this spring. Since then, he claims, 2 crypto market crashes have caused its assets to lose value, even as more users have flocked to the network. Before a run on the bank, which saw $8 billion in withdrawals in a matter of days, the bank's assets had dropped to $17 billion in November. Now, what about those misplaced $8 billion? In his opinion, the icing on the cake was learning that there were an additional $8 billion in obligations owing to old cash deposits made before FTX had bank accounts. Earlier, Bankman-Fried had stated that those debts had been disregarded for years. They existed because the corporation requested users transmit money to the hedge fund run by the group Alameda Research, whose pervasive mismanagement led to billions of dollars in capital getting lost. The fact that Alameda's solvency was based on billions of dollars worth of a token, FTT, that FTX printed itself and had no deeper value beyond the promise of FTX to effectively pay dividends to holders was revealed after Bankman-Fried's note to employees glossed over the source of the confusion and failed to mention the incident that sparked the November bank run. He said that he realized neither the scope of the margin position nor the gravity of the risk posed by a hyper-correlated crash fully. The former CEO, who was replaced in mid-November by John J. Ray III, a bankruptcy expert who handled the dissolution of Enron 20 years ago, has said FTX is the worst case he's ever seen. Next up, there's a chance the collapse could have been avoided. FTX has denominated billions of dollars of its assets in tokens it owns, like FTT and Serum. A balance sheet published by Bankman-Fried just before FTX's bankruptcy showed that $2.5 billion of the company's assets were held in tokens the company had generated, with a market cap of a small portion of that amount. Bankman-Fried summarized the company's financial position by marking everything to market, regardless of liquidity, and assumed that FTX could sell its sizable holdings of crypto assets at prices close to market value. On Tuesday, the Delaware Bankruptcy Court heard testimony about how the previous CEO had used FTX as his own kingdom. According to the company's attorneys, the UK was home to 8% of the FTX group's consumers, or around 80,000 unsecured creditors. It's thought that most of those users are corporate clients and investment experts who use the loosely regulated FTX international exchange to make hazardous leverage bets on cryptocurrency values. Online bank Starling issued a 7-month halt of all customer deposits to cryptocurrency exchanges following the demise of FTX, citing the risk to customers. The bank stated that the suspension would be reconsidered in June 2023. An appropriate central bank could have probably saved FTX for cryptocurrencies. The information we've gathered since the bankruptcy proceedings started indicates that the issue was deeper. Coming up, it's just a little too late. Anyway, Sam Bankman-Fried wrote a quite transparent letter to the staff of the collapsed crypto exchange, blaming his irrational judgments on conditions. He claimed that as his cryptocurrency enterprise rapidly lost investor confidence and users swiftly withdrew billions of dollars from the site, he froze up in the face of pressure and leaks. What do FTX employees have to say to that? It's just a little too late. Thousands of livelihoods have been destroyed and billions of dollars are stuck, all because people trusted what SBF was claiming to sell, and they'd hope he makes some sound decisions in the face of adversity. Also, some people saw it coming. The first time Terry Duffy met Sam Bankman-Fried, the CME Group CEO claimed he called him a fraud. Now, according to Duffy, he wants to know where the funds for FTX's political contributions, opulent houses, and other acquisitions came from, if those are customer dollars or earnings from the cryptocurrency exchange. Whose money were they spending? Unaware customers? People need answers. Moving on, after the FTX crash, here's what you need to know. The price of Bitcoin has fallen once more in the wake of FTX, one of the biggest cryptocurrency exchanges in the world, declaring bankruptcy. It's currently at $16,500, a far cry from the record-breaking $66,000 it reached only a year ago. Why did the value fall so drastically? The highly toxic combination of the Binance exchange, the Tether stablecoin, and the knowledgeable, experienced traders using high-frequency algorithms is to blame. Bitcoin can be traded on various exchanges, unlike stocks, but because Binance controls more than 50% of the cryptocurrency market, the price of Bitcoin and other cryptocurrencies is set by it. Traders must change fiat currency into a stablecoin like Tether to purchase cryptocurrencies. Trading on Bitcoin Tether determines the dollar price of Bitcoin, since it has by far the highest volume of all items on Binance, and because one Tether typically equals $1. But the entire crypto economy also collapses when Bitcoin fails. The problem is that Binance is solely self-regulatory, which means it's not subject to oversight by conventional market regulators like the Securities Exchange Commission in the US or the Financial Conduct Authority in the UK. Because professional traders may utilize high-frequency price manipulation algorithms on Binance, which are illegal in regulated markets, this is a huge draw for them. Because of this, we get price swings and a lot of volatility. So beware. Research before getting into anything, especially during this crypto winter. Up next, the problem is far from over. The current state of the cryptocurrency markets can be compared to the dot-com bubble burst in the early 2000s. As many businesses filed for bankruptcy, the venture funding that had flooded into internet firms in 1999 to 2000 abruptly dried up as the price of Bitcoin fell this year due to unexpected and shocking attacks on a brand new stablecoin called Terra. Major crypto lending companies Celsius and Voyager also declared bankruptcy. Three Arrows Capital, one of the biggest cryptocurrency hedge funds, also defaulted on its loans. Since FTX filed for bankruptcy, consumers have been unable to withdraw their money from Genesis, many other lending platforms, Gemini, and other exchanges. Now that venture finance has dried up in the cryptocurrency business, we'll see more of this contagion, leading to widespread startup bankruptcy. More exchanges and loan platforms will fail, along with blockchains, NFT marketplaces, data aggregators, and analytics firms. From this mayhem, Binance might be able to establish a monopoly, but at the moment, this non-domiciled and self-regulated organization still depends on fee income from regular investors and on market makers to run its operations. The cycle of volatility lives to see another day. Finally, what can customers do in the wake of bankruptcy proceedings? One thing is for sure, prepare for stricter regulations. But if you're someone who has their money stuck, here's what you can do. Anyone who can show that FTX owes them money will have to wait in line to receive restitution now that the company has declared bankruptcy. According to the bankruptcy documents, the business may have more than 1 million creditors. Courts may have to decide how to handle specific clients, including where they rank in priority among other creditors, making this a complex legal scenario. If you rely on social media for the most recent news, you should diversify your news by including the federal court system. We advise you to keep up with the case and thoroughly examine whatever facts you are given. Take the help of a professional if you don't feel at ease because you don't want to give up any rights you may have if you have a good amount of money or any amount of money stuck with the exchange. Good luck. That's a wrap for this video. Where do you think SBF and FTX are headed now? Let us know in the comments below. As always, don't forget to like this video and subscribe to our channel for more videos like this. See you at the next one.